Well, international stocks are the spice that might be missing from your investment portfolio. And if the outperformance of international stocks over US this year doesn't yet have your attention, then allow me to awaken you from your slumber. Developed international stock ETFs are sizzling, and they've been sizzling by a wide margin. Today's ETF battle is a head-to-head contest between Avantis and Vanguard. So who wins? Well, let's find out right after this. I'm Ron DeLegge. It's great to see you again. You're watching Season 6 of ETF Battles. Keep your awesome ETF battle suggestions coming. We've had some great matchups. Send me your ETF ticker symbols in the comments section below and make it good. We could do double, triple, and quadruple headers. Also, be sure to check out the description section. We've got a link to our program sponsor, Direction. Get in touch. Direction.com is where you go for all things leverage and inverse, as well as single stock ETFs linked to those Mag 7 stocks, including Apple, and NVIDIA, and Tesla. Direction.com, get in touch. Also, we've got program resources or viewer resources for our program viewers, including free ebooks, as well as other good things down there, so don't miss it. So today's ETF matchup was requested to us by a viewer named Ibrahim. Ibrahim is a loyal viewer, and he wanted to see a matchup between international equity ETFs tracking them from Avantis. We've got AVDE and Vanguard, VEA. And this is a interesting matchup and certainly one that we can do. And helping us to sort through the mecca of madness, we've got Mike Akins with ETF Action and Athan Psarofagis with Bloomberg, two of the best in the ETF business. Guys, great to see you.
Well, thanks for that intro. Nice to see you guys.
Yeah, great to see everybody. Thanks for having me, Ron.
So we're going to go through our 4 battle categories and give each one of you an opportunity to weigh in. We've also got our mystery battle category where you can pick a mystery factor or thing that you feel is crucial. You can also nominate wildcard ETFs. We'll see if our judges come up with any. Keep in mind, none of the battle outcomes are ever predetermined or known in advance by myself or our judges. So the first category is cost, and we're going to start with Athan. Please get us started.
Great. Well, I can't think of any category where you're going to beat Vanguard on cost, right? That's just the reality. Is 3 basis points versus 23 basis points for the Avantis product. That said, 23 bips for active, they're almost essentially becoming sort of like the Vanguard-esque inactive, because that is pretty cheap in knowing where sort of the average fee in the whole industry breaks. But overall, you can't, and these are massive products, 156 billion in the Vanguard one, almost 7 in the Avantis, which is also really impressive. But overall, 3 is just basically free. So it's too much of a gap to not give this to Vanguard.
Thank you very much, Athan. That's a strong start. Mike, you're up next. How do you see it?
You bet. I mean, I always say, anytime we do these cost battles and Vanguard's involved, the other issuer is bringing a knife to a gun battle. So there's just no beating it. I don't have anything to add. It's basically free access to international markets via the Vanguard product, but definitely Avantis is a very low cost product. I mean, just think of that you're getting active management in a tax efficient wrapper for 23 basis points to not the US markets, but to international markets. You just can't replicate it. The ETF wrapper is undefeated when it comes to cost and efficiency, and that's all I would add to that. But yes, VEA is my winner.
Exposure strategies are next category. Mike, you're still up, so break it down for us.
Yeah, so I mean, these products are extremely similar, right? I mean, VEA owns the market capitalization of the developed world. Avantis targets the market capitalization of the developed world, but then applies some multi-factor screening on an ongoing basis to generate generally kind of a little bit of a value tilt, a little bit of a size tilt to that overall, but it's not active in terms of stock selection as you traditionally think of it. It's not going and getting a concentrated portfolio of their best picks. It's basically trying to optimize that process of creating a more efficient access by screening on an ongoing basis across that universe. So The strategies are incredibly similar. Tracking error, I would say, is going to be very, very small between these two funds. They have been historically. It will be going forward. So you're just kind of playing on the edges a little bit. And the question is, does that constant refinement by Avantis get you 20 basis points of value? And we'll talk about that in the next segment. But when it comes to my winner in this category, I actually like applying a low-cost, ongoing filter to the market. It can create some value over the long term. You're not paying a significant amount for it. So I do think within this international large cap space, while not a huge amount of value is going to be added through it, I think there's enough there to potentially overcome that basis point. So I'll give the win to AVDE on exposure strategy, overlaying their quant strategy on top of that area of the market.
Thank you for that contrarian opinion, Mike. It's quite refreshing. Athan, you're up next with your opinion. Give us your analysis.
International is definitely one of the areas where you could maybe see some value add from active. And like Mike was saying, this is not super concentrated. So you're still getting about 3,000 holdings in both of these ETFs. So they're both very, very broad. You have a value tilt. You get a little bit size tilt, like Mike mentioned in the Avantis one. Your top weights are going to be, country weights are going to be about the same. It's Japan, it's the UK, it's Canada. The only difference is you're getting Korea in the Vanguard fund. You're not getting that in Avantis. It might not matter that much. It's only a 3% weight, but just something to keep in mind about sort of country definitions. You do get a little bit of differences in some of the sector bets because of the tilts, right? So you tend to end up being more overweight banks with Avantis and pharma, which that stuff has actually worked out well right now. But so you do have a little bit of a factor bias, a little bit of a sector bias. But overall, it seems like for that little tracking error gap that Mike had mentioned, they're getting a lot of juice out of that. So I like that, and I think it's an area that I like active management. So again, very close, both very well run. You're getting a lot of the similar country exposures, but I think you're going to give the edge here to the Avantis product.
Well, that takes us next to performance, and Athan, you're up. So how do these two ETFs compare?
Something you mentioned in the beginning is that how international has been doing really well. So with either one of these, you're hitting all-time highs in these ETFs. So you would have been great with either one of them, but you are seeing the Avantis products start to separate away from it. So it's beating the Vanguard one on a year to date, a 1 year, a 3 year, a 5 year, pick any date. It's starting to really sort of have some separation there. So you're seeing that even for that 20 basis points difference in fee, you're getting some meaningful outperformance. And I think that goes back to how active tends to work a little bit better in these markets. So with that, I think it's just hard to argue on the performance aspect for that Avantis has a advantage here, and it's really starting to get some separation off of just the Vanguard one. So I will give performance to the Avantis product.
All right, very good. And when that performance happens, that's referred to, correct me, judges, if I'm wrong, as alpha. Is that correct?
You bet.
Alpha, is that that's the alpha and omega? That's Greek, isn't it?
Yeah, it is.
All right.
The beginning and the end.
The beginning and the end. That's right. And when it doesn't happen, we refer to it as alfalfa. It should be alpha, but I call it alfalfa. Great job, Athan, on that one. Mike, you're up next. Break it down for us in terms of performance between these two ETFs. How do you see it?
Yeah, I really can't add a lot. I mean, the 1, 3, 5 since inception all goes to Avantis. So no matter how you're looking at it on a performance basis, it has eked out additional returns, 300 basis points on the 1 year. And that's significant in terms of overcoming its 20 basis point additional expense ratio. I guess I can add in, since you want to go down the stats, on the 3 year, it's got an alpha of 1.08% relative to VEA. It's got up capture in line, but a significantly lower down capture at only 94%. So it's really picking up that alpha, if you will, in the last 3 years on that downside capture, which might be a little bit more of that defensive tilt, a little bit that value. But in general, it's got a pretty good track record. It's not brand new. It's done it consistently. So your information ratio is a 0.52, which is your consistency of outperformance. It's a pretty impressive figure within the ETF space for a category as large as this. So I think I got to give the nod to the team over at Avantis on putting together and to this point managing a very good product.
That takes us next to our mystery battle category, where our judges could pick a single or multiple factors that they think are meaningful for today's contest. So, Mike, what is your mystery battle category, and which of these two ETFs wins it?
Well, I think it kind of brings us into this whole idea of active versus passive and the debate of active passive. And Avantis is just like Dimensional are a really good example where I would not consider them true active bottom up stock selection, fundamental analysis. It's a quant strategy, but being implemented on an active basis. And I think that's the key I want to focus in on. One of the reasons I'm so excited about active management at the appropriate cost, at a well cost, where you're still competing on fees. You're not charging 100 basis points plus on these products, but you're charging a reasonable fee, is because one of my biggest knocks on factor passive, so like your more rigid factor strategies that are rebalancing on a quarterly basis or a monthly basis or an annual basis, is how do you implement that without moving the markets, right? And we've seen this with some really big pure passive ETFs where they have to rebalance out of a security into a new security all at once. And in doing that, the market's not dumb. They see it coming, they get in front of it, and it hurts the performance of the index, right? So it's always like, why the back test did so well, why when I put it into action did it not do as well? And part of that is because you have to actually implement. An index is not investable. You actually have to implement this. And what active does, I think, in a lot of degrees, is it bridges that gap between these hard pressed rebalances that can cause bad execution and hurt your performance, drag on it, to being like, look, we're doing a similar strategy, similar screens to your pure passive product, but we're implementing it all the time. We're making the choice on when to hit that buy button, when to hit that sell button. We can do it over 3 months if we want to. We're not telling the market what we're doing. And I think in my mind, when I look at active, I think of active as factor strategies generally. The degree to which they're doing it varies significantly. Like Avantis is very small, whereas some other active is very large bets. But the idea of the implementation, I think, is really interesting. And I think Avantis and Dimensional, because they are quant-based strategies, really prove that out. And so my mystery category is implementation, active versus passive. And I give the win to AVDE for how well they're able to implement their strategies without that rigid contracts of quarterly rebalances or annual rebalances.
Great points. Thank you, Mike. Athan, you're up next. What is your mystery battle category, and which of these two ETFs wins it?
It was really great, Mike. I mean, honestly, when I was looking for one, it was really hard to find because honestly, these are both really great products. They're very well run. They don't pay out capital gain distributions. You get 3,000 stocks. So I found one, and the kicker, it's a very small one, but it's on yield and sort of how often they pay out the dividends. You get a slightly better yield in VEA, not by much, but it pays it out quarterly versus only semi-annually for the Avantis product. Not a huge, I don't think it's a huge difference, but it's just if that's something that's important to you, the frequency of the payouts, you're not going to get it as often with the Avantis product. And again, a slightly better yield with VEA. I know that's oftentimes not why people buy international, but just for that small mystery category, which is yield, I will give this one to the Vanguard product. I think it just barely edges it out.
All right. Well, now we move to the part of the program where our judges can give us their overall battle winner. So how will this go down? Athan, your final choice. Give it to us.
Yeah, it's a tough one because they're both, you would have done fine with either one of them. But to a lot of the points that Mike was saying before about sort of the implementation of active and the way they're doing it, and for what you're getting at 23 bips, it's Avantis is a really great product, and the performance is starting to shine in that product. So I think that overall, I think the Avantis product is really great. I like active in the international space. They've done well. They've already got $7 billion in assets. So it's a really tight one. I think you're okay with either, but if I had to pick one, it would be the Avantis.
Mike, your final chance to weigh in with your overall winner.
Yeah, I mean, you can never go wrong building a diversified portfolio of Vanguard products or low-cost iShares or low-cost State Street or whatever it may be. Strategically allocating via beta strategies, if you just want to own the market, is an excellent way to go about it. If you are looking to improve on the edges and potentially add, just remember, anytime you potentially add alpha, you potentially are going to underperform as well, right? So tracking error goes both ways. But if you believe in a strategy, which I think there are strategies that can add in a repeatable way a little bit of alpha over full market cycles, I think Avantis is one of them. And to that extent, I'm embracing the low cost active concept to the extent it is low cost, to the extent that it's you got to do your due diligence, right? There's 450 ETF issuers. That's right. You heard that correct. 450 brands out there in the marketplace today. So if you're going to get into active, you got to do your research on the managers. But in this case, I think AVDE does a great job, and I give it to it as my overall winner.
Well, according to my final battle scorecard, I think we have a consensus choice. AVDE from Avantis is the winner, and it won on most categories with the exception of cost. Our judges brought up some great points. You're getting active management at a reasonable fee, and I think that was a very good point pointed out by both Athan and Mike. And of course, AVDE has that value and size tilt. It will differ from the MSCI Developed International Index. But as our judges mentioned, it might be worth getting that different exposure for a strategy at a reasonable fee. And especially if it can outperform, and certainly the performance has been there for AVDE, quite impressive. And so keep this one in your back pocket. This was a great matchup on today's program. And thank you so much, Ibrahim, our viewer, for recommending it. Great work by both of our judges, Mike and Athan. We couldn't have done it without you.
Yeah, thanks, guys. This was great.
Yep, enjoyed it.
Yeah, be sure to hit the description section below. We've got links to both of our judges. Get in touch. Of course, Mike over there at ETF Action, doing lots of interesting and innovative stuff in the ETF marketplace with ETF portfolios and data. Also, Athan at Bloomberg, doing a lot of good stuff on the ETF research side. So again, get in touch with our judges. And of course, our program sponsor, Direction. Be sure to go to direction.com and check out their ever-expanding ETF lineup, which also includes single stock ETFs, which have been booming. Single stock ETFs linked to companies like Apple, NVIDIA, Tesla, and many others. So check that out at direction.com. Well, send me your ETF battle requests in the comment section below. Keep them coming and make them good. Give me your ETF ticker symbols. What would you like to see on our next show? Thanks for watching. I'm Ron DeLegge. This is ETF Battles. We'll see you again.